off and away from all the corporate governance issues?
Morning, Aisha. So I think, yes, an encouraging set of numbers reported, but one must also remember that there was an element of a forex gain. So in spite of that and adjusting for the same, I think the numbers were still better off than what a lot of analysts on the street had pegged. The second element, as you're rightly pointing out, is going to be related to the corporate governance issues. And though that management has tried to allay fears, both in terms of the related party transactions, whether it's Aditya Medisales or Atlas Global, I think what actually comes out of it over the next few weeks or months is going to be very, very interesting. At the same time, I think the resolution is going to be extremely critical in terms of the A&D applications that get filed from that facility. And again, I think the pipeline, specifically the specialty pipeline that Sun Pharma has, does put it in a very good position as these approvals start coming through. So I think there are a lot of offsetting effects that the stock can face. Prima facie, looking at numbers, the stock can give a positive reaction. But as clarity will emerge on all these aspects, I think the new re-rating or the fresh re-rating will happen only then. So again, I think would maintain the stance that the stock might react positively, but then would stay in a range if it does open higher at a consolidated level in a range-bound manner.
What's the assessment, Mayuresh, morning, when it comes to Coal India and the kind of earnings growth that it delivered? You know, it was strong realizations that lifted its numbers. Brokerages as well are hailing this as quite a positive. What is your assessment of the earnings?
Morning, Avan. So yes, I think if you look at the realizations, specifically both on the FCA and the auction front, when you're talking about 150 million tons produced, 135 million tons on the FCA front, and when you're talking about realizations at 1,334 rupees per ton, I think the e-auction realization did surprise. So even though the e-auction volumes came a tad bit lower, around 14.2 million, 850 odd rupees per ton, but significantly we are looking at the kind of power plants have at this point of time. I might need to supply for the coal that actually come down, at least for the next few quarters. Second element, that buying coal. And at this point of time, I think even if one looks at valuation, I think it's very, very attractive. Volume is something that I expect volumes will not for the next year, year and a half, in terms of a greater proportion of FC sales. So you're probably looking at volume price in the auction sets degrowth. So there is sufficient the stock may get stuck up for the next few months unless sustained improvement overall.
You just have to understand Axis, you know, the offer sale got a very strong, and today the book is well opens. Is that subscribe?
I won't call it a blind bet, but largely I think look at the numbers that the bank has been producing over the past few quarters. The trend obviously is on the positive side. Now, when you look at the qualitative parameters, advances, very fast clip. Retail actually going faster than the corporate book, I think, is a very, very encouraging sign. The second element obviously is the asset quality, and with a large recognition of their watch list done over the past few quarters, I think the asset quality pressures are ebbing off, and they're clearly getting reflected in terms of numbers getting reflected on the balance sheet. The third element obviously is the provision coverage ratio, and the PCR, including the NCLT cases, have improved significantly for the bank, and that again instills confidence in terms of how their book is probably panning out. The fourth element obviously is their cost to income ratios and credit costs in general. So I think if one assumes them to probably top out and then start tapering off over the next few quarters, with the assumption of credit growth also improving significantly, and I think asset quality remaining stable, along with capital adequacy remaining strong. I think they've got the light levers to probably push their balance sheet growth and expansion into a fast track mode. What this will reflect is better ROAs and ROEs over the next couple of years. And obviously, I think the book value also gets enhanced. So I think, yes, I think when you're probably talking about the OFS at this point of time and the fundamentals surrounding it, I think there are strong fundamentals to back the valuations, even though at elevated levels for Axis Bank.
The strong fundamentals, Mayuresh, their book is struggling. They want to move into insurance, which is going to be a huge cash flow problem. We still don't know what will happen to the power exposure. So I hate to say this, but I hope that Axis Bank is not turning on hope trade. Yes, there is a marked improvement in their NPAs, but a lot is riding on the fact that Amitabh Chaudhary will do this, he will do that, he will achieve this, he will achieve that. That's only fair.
No, again, Nikunj, I think if one really looks at the qualitative aspects, even loan book, when you think about the power sector exposure, provisioning has been done for the rated power exposures, and a large element of the power exposure for Axis Bank again is the better rated book, which is A and above. So I think there is sufficient amount of confidence both in terms of the book that it carries on the power side. And general, I think if you probably look even outside the watch list, a large element of recognition has probably taken place. On the second aspect, in terms of the leadership change that you've recently spoken about, yes, I think expectations do run very, very high. But again, that from a qualitative perspective, I think if a lot of cleaning up has happened, and when talking about some also in process over the next few years, I think that clearly gets offset in terms of the strategic roadmap that the management has put in. So when you're talking about a de-risking model, I think you look at the non-interest income component for the bank as a whole as well. I think retail also has a lion's share in that part, which alleviates a lot of risk that comes in through that component as well. So there are sufficient levers in place. As I said, I think valuation is not cheap, but yes, bank, if it's able to provide all this in terms of qualitative aspects going forward as well, I think there is no reason to worry in terms of how the bank can perform from a fundamental perspective.
Okay, just let's quickly take on to the screen with the pre-open rates. 10,900. Sensex is well in the green. Unexpected lines has gotten off to a heady start. Coal India, Reliance Industries as well, and Hero MotoTitan to look a little bit bleak. Mayuresh, wanted to get in your thoughts on Bata India. That too came out with a pretty impressive quarter. The profits have jumped 51%. EBITDA has grown quite smartly. But that there is that fear of increased competition, better, more economic offerings by other footwear makers, or do you think that, Bata will continue to see spring in its step?
So this has been one of my favorites over the past few months. And one, I think if you look at how the numbers have panned, revenue growth of 60%, the EBIT growth was quite stellar as well. And that's getting clearly reflected in terms of the strategic roadmap that the management had put in place a few quarters back. I think the clear strategic roadmap also includes opening up of stores in tier 2, tier 3 towns. And yes, competition always exists. So when you're probably talking about how competition intensity pressures have played out, I think Bata has produced a stellar set of numbers in my opinion. Again, if you look at the numbers top down, I think it has been a beat all through. So even on the operational front, I think the operational performance has been quite stellar. Again, I think one really needs to normalize margins going forward, and a large in terms of the increased foray into the ladies' footwear, margins are relatively higher. And again, I think the kind of product suite that Bata has at this point of time, I think it's a very, very attractive proposition in terms of how they'll be able to deliver both in terms of volumes, realizations on the operating front, and they do possess a very healthy balance sheet as well. Now, the only argument against Bata can be the run-up in the stock and the valuations that have got stacked up from a long-term perspective. Apart from these two factors, I think the show has been pretty stellar. With the run-up in the stock and the valuations that have got stacked up from a long-term perspective. Apart from these two factors, I think the show has been pretty stellar by Bata.
Yeah, but